Welcome guys to our first video in a series that I want to start, where I basically break down our trading plan here at Beyond the Huddle, and I will walk you guys through some concepts and theories and show you guys how you can put this together into what is a high probable and profitable trading plan. So let's get started. So before we begin talking about the long and shorts or any type of data or tools that we will be using for our trading plan, I want you guys to get into the right state of mind. And what better way to do it than to use this quote here found in our homepage. And the quote is, "Trading is not about being right, but identifying when others are wrong." This is such a simple yet powerful sentence, and once you truly understand the meaning behind it, then your trading is going to take a step to the next level, and you will find a lot more consistency and a lot more profitability. And this is because a lot of people are always just chasing green. Okay, you're always chasing the big up moves in the market, and that means that you're not you're just reacting to the price instead of buying the fear and the blood that everyone has. Okay, so the tool that we have created here in order to take advantage of this sentence right here is what we like to call the derivatives long and short extremes. And it's exactly what it sounds like, derivatives, because we're using the data from exchanges that has to do with derivatives, and in long and short extremes because when you hit a long extreme, we expect the market to react a certain way, and when we hit a short extreme, we expect the market to react another certain way. And in short, basically what this does is an alert that comes through our Discord and tells us when an extreme in the market has been hit. And as you can see, I'm highlighting here, the importance of this is that knowing when one side of the market is overcrowded is one of the most crucial things you can do to make profitable trades. Okay, think about that real quick. Why would I want to jump into a market after it's rallied that I know now is too overcrowded, right? Once everyone in the whole entire world knows about a certain trade, whether it's a narrative like the NFT, what happened in Solana back in the day, or the DeFi, or any of these AI stuff, or whatever's going on in the market, once everyone knows, it's no longer a hidden gem. You should already be in that trade, and you should be riding the wave looking for reasons to get out, right? When that then trade becomes too overcrowded because everyone knows about it, everyone's talking about it on social media, Facebook, YouTube, whatever it may be, that's when you should be thinking, okay, is the volume too high? And again, other stuff that we will take a look at that could potentially get us out of that trade. So again, as this says here, right, you'll be able to identify potential trap traders and take advantage of their mistakes. Right? So that means you'll be able to avoid being trapped yourself and increase your chances of success. How many times have you entered a trade and you've been stopped out, right? The market goes against you, your stop gets hit, only to have the market go your direction. Well, hopefully when you start adding this idea to your repertoire or to your strategy, that will happen less and less. I'm not promising you a 100% strike rate, alert system here, but that's the only thing it is, right? It's just to alert you that a certain shift in the market has happened, and then you need to go in and make some technical analysis work or whatever you guys use to get into your trades. And that is actually something that we will go over in some of our other videos, but for this specific video we'll just focus on the alerts that come through. And as you can see here, let's get started talking a little bit about how this works. So again, it's an overcrowded trade. So when we're looking at the shorts here, the idea would be that whenever blue arrow shows up, there were too many shorts. Okay, now the arrow shows up at the close of the candle before. Okay, so then at the open of the one that is showing. That's another way to think about it. So when this down move happened, again, too many shorts in the market, then the bot detected there was two extreme shorts, and look what happened the very next day, right? So you're buying the open of that day, and the market ends up going up, as you can see here, right? After this big beefy candle, remember, people are going to be chasing that candle, and I bet you've done it too. I, try my hardest not to jump in on coins like this, so, to minimize the collateral damage in case I am wrong. So hopefully, you guys can adapt this way of thinking, and remember, trading's not about being right, but it's about identifying when others are wrong. And when the trade is too overcrowded, you're likely to be wrong, as you can see here through the arrows and the historical data that we have. So again, right, the market went up aggressively, and then by the close of this candle, what do you get? Two extreme longs, right? So when too many people are piled into that long, the market is likely to reverse if it starts to break some sort of lower time frame, structure or bias, or hits a higher time frame resistance or something like that. Now look what happens. The market falls aggressively down, and then at the close of this candle, right, the big beefy red candle, then at the open of the next one, you're going to get the blue arrow, because you indeed had an extreme of shorts. Too many people got piled into that short. And again, you can just, look at the historical, so on and so forth. And you do get some really nice, again, you'd be shorting if you are into that. I like to mostly focus on the long side, unless it's Bitcoin or Ethereum. Those are the ones that I really like to trade their sell side. But you can see this one right here had a really nice rally. And we're actually starting to get some sells right here. So what does that mean? The market went up aggressively, and in the past 2 days, there's just been a lot of abnormal longs in this market. So the alert system picked it up, and now we're getting back-to-back alerts. So that's really the first step to focusing on when others are wrong, is to first figure out what is an overcrowded trade, how can I identify it, and how can I take advantage of it. So again, in our Discord, this is a tool that we've developed. You guys can find it on our website. You're right here in the Get It Now. We will be breaking it down, on a weekly basis, I think, or something like that. We're going to find a way to get you guys to really understand this tool. And you're going to get it to your Discord. You can see right here, if I go to my Discord, we're messing around with some 4-hour and hourly ones too, in case people want to be, short-term trading or stuff like that. So if I click on one of them here, you can see LRC, and this is a 4-hour one. So we're looking at shorts, right? Remember, the word short, people usually think it's a sell, but in this specific case, too many shorts is actually bullish, because when there's too many of them, the overcrowded trade idea, then that's when other people are likely to be wrong. And you can see right here, we started to get an overcrowded trade here, and then finally you saw the reversal. Really nice rally. Even after this drop right here, a very nice rally. So you can see the spikes in the shorts, and then another spike in the shorts here, a very, very healthy, nice rally there. And now we're starting to get some spike in the shorts. Now, I want to reiterate something I said earlier, and it is that we get the signal first, right, the alert into the Discord. That brings our attention to that specific coin, but then we need to analyze it based on our TA that we use here at Beyond the Huddle, or any other stuff that you guys may use on your own. Okay, so on our next video, I will be covering more about what that other stuff is once you get this signal, okay? So, yeah, with that being said, guys, I guess right here you can see there's one long. Now, actually, I forgot to mention about the volume. So the volume is really interesting. We've been, right, it goes kind of hand in hand with the overcrowded trade, right? If there's really high volume and that specific side of the market is one-sided, so let's just say the longs hit an extreme, and then the volume gets really, really high, then that's likely to be a high. For example, right here, you can see the volume was abnormal, and that was right on the spike of the market right here. The longs did get a little bit, they went up a little bit, but they weren't exactly extreme, so then there was no alert right there. But look, you see right here, the volume spikes up, and then the market peaks. Now, the reason why I think this happens is the smart money, right, the whales, they like to buy when the market is silent and the volume is down, everything's dead, everything's boring, right? They accumulate during those times, and then while the market is excited and very, very vibrant, they like to distribute their positions, and that's when we'll see the extreme and longs. And once that happens, then you can go ahead and think about distributing. So for example, right here, had you bought there, you should be thinking about distributing anytime you see the extreme and longs, or anytime you hit some sort of your resistance levels or stuff like that. So yeah, guys, I hope that you like this first new tool, this first new concept. And like I said, in our next video, we will cover what we do after we get these alerts, and how we can confirm whether we do want to, enter the market or not. So with that being said, I'll see you guys in the next video. Take care. Have a great day. Peace.